Now today we're going to talk about a very important factor when you're buying a home. That is, how do you get qualified for a loan? So unless you have all cash and you're ready to buy a house at all cash, and if you do, here's my Venmo, then there's 3 checkpoints that you need to check off to make sure that you're able to qualify to even get a loan. Employment history, credit score, and a good DTI, good debt to income ratio. And we're talking a little bit about all 3 and what those mean. On this video and all of my other videos I'll be doing, I'll be focusing my attention to the people of Hawaii and how to help locals buy homes and be successful in real estate. But a lot of these questions or a lot of these answers, they can be translated to other parts of the country and other states. But as a local boy, to my people of Hawaii, these videos are for you to help you learn a little bit more about the real estate process and therefore get you educated, get you those keys, and to secure your future, not only for you and your family, but for future generations to come. So let's do it. So the first checkpoint when it comes to getting qualified for a loan is employment history. When it comes to employment history, there's one thing you have to remember: 2 years. 2 years. So if you're an employee for a company or you get a W-2 at the end of the year, banks and lenders, they want to see that you've been working with that company in that position for at least 2 years. Or if you haven't been with that company for 2 years, they want to see that you've been at least within the same field of work for the same amount of time. So for example, if you're working construction and after a year and a half things don't work out with a specific company, and you switch companies to another one, as long as you're doing construction in the same field during 6 more months or so, and you've been in that field for 2 years, then that qualifies you to get a loan. Now, one way to get around that is if you've been in school, you've been training for that specific field, that specific position, at least for the past 2 years or 4 years, like a typical university, then as soon as you graduate, they'll use that training time or that school time towards the employment history. That should count towards your 2 years. Now, if you're a business owner or you file 1099 at the end of the year, same thing, 2 years. 2 years! These banks and lenders are gonna ask for 2 years of tax returns for that specific company, for that specific business that you've been running. As long as you've been paying taxes for that business for at least 2 years, then you should be good. If you're making money, if you have your own business, but it's not taxable income, unfortunately, these bank and lenders are not going to use it towards getting qualified for a loan. So whether you're a W-2 employee or if you're a 1099, whether you're a W-2 employee or a 1099 business owner, as long as you have 2 years employment history, then you're all good to go. Let's check that off the list and you're ready to move on to the next checkpoint. Checkpoint number 2 is your credit score. So in order to get qualified for a loan, you need to have a qualifying credit score that shows that you're someone that the banks and lenders can trust with their money. What credit score do I need in order to get qualified for a loan? That depends on whatever loan options you're looking at, the loan programs that are available. But for the most part, when it comes to first-time homeowners, you're looking at 2 loans, the FHA loan and the conventional loan. For FHA loan, the minimum credit score that you need is a 600. For a conventional loan, the minimum credit score you need for that is around a 640, 650. I think it's a 640. So it's safe to say that in order to get a loan from a bank or a lender, your credit score needs to be at least a 600. That doesn't mean that if you're at a 600, let's be satisfied. Talk to your lender, talk to your realtor, see what credit score works best for you. Obviously, the higher you go, if you're at a 700 or even better, a 750, then you're gonna get better pricing, you're gonna get better loan options. Now also when it comes to credit score, if there's multiple people applying for the loan, say a husband and a wife, they're gonna look at the credit scores of both the borrowers, the husband and the wife. So make sure the husband credit score is good and the wife's credit score is good, or at least qualifying so they can get the loan. If your credit score is around a 600 and you're comfortable with that according to what the lender has said, then you're ready to go. Let's check that off the list and let's move forward to the last checkpoint. Now the last checkpoint for getting qualified for a loan is called your debt to income ratio, or your DTI. Now this is probably one of the more harder things to understand, but I'll break it down in a more simple form. Now for your DTI, first you need to figure out what your what your gross monthly income is. So when you get a paycheck, it's not the money that goes into your bank account after you pay your taxes, your social security, your union dues, all of those things. They look at the first number that appears there, or the gross number. The second number you need to figure out is your monthly debts. So monthly obligations that you have to pay out every single month for accounts that pull up on your credit score. So things like student loans, car loans, credit card bills, all those things that pull up on your credit score. One thing to keep in mind is that for student loans or car loans, although there's a bigger amount, say for student loans, if you took out $100,000 to go through school, the banks and lenders, they're not worried about that big amount. They're more worried about those monthly payments that you have to make every single month. So instead of looking at the $100,000 that you owe, they're worried about the $250 that leaves your bank account every single month. So what you do to figure out what your DTI is, you take all of your monthly debts, so the monthly payments you make to those accounts, you add in a hypothetical monthly payment you make for a house, you divide it by the gross monthly income that you make from your salary or from your job or from your business, and that's gonna come out to an answer. So that answer for bank and lenders, they wanna see that your debt to income ratio is around 50%. So after you plug those in, they wanna see that answer to be around 0.5. The number can change according to your credit score, according to what loan option you use. But for this example, let's say it's 50%. So let's throw that into an example. Let's say that your gross monthly income is $6,000 a month. So according to this DTI ratio, that means that all of your monthly debts cannot be more than 50% of that, or they cannot be more than $3,000. So let's say that your car loans, your student loans, your credit card bills, they come out to around $1,000 a month. That means that the banks and the lenders, they're gonna use this equation and say that you're qualified for a house monthly payment of around $2,000. Now I know that that number doesn't really mean anything to you right now, and you're probably wondering, what does $2,000 equal or translate to when it comes to purchase price? So when you get to that point, reach out to your lenders, reach out to your banks, reach out to your real estate agent, and we can kind of figure out what that means in terms of buying power, in terms of what you can afford and what that purchase price looks like. After you calculate all your monthly debts and a pretty good monthly payment for a house, and your DTI is around 50%, then you're good to go. Let's check that off the list. You did it. So if you're able to check off all of these 3 checkpoints, then that means that it's time to start thinking about buying a house. So get in touch with your realtor, get in touch with your lender and bank, and let's figure out how much you're pre-approved for, and then you can go house shopping. If you weren't able to check off all of those points and there's some things that needed to work, don't get discouraged. It happens to a lot of us, okay? So let's just buckle down, let's do what we gotta do, and let's get to a point where we can check off all 3 in order to move forward. Now, all 3 of these checkpoints are all required in order for you to get a loan. So even though you might have a good credit score, even though you've been working for that company for 15, 20 years, if your debt to income ratio is still pretty high and you have a lot of debts, then unfortunately you probably won't get qualified for a loan. And the same goes for all 3. But if you hit all 3, if all those checkpoints were checked, let's get you in touch with a lender, let's get you in touch with a realtor, and then let's start thinking about what you can do in order to buy a house here in Hawaii. Like I mentioned earlier, my whole goal for this video and the other videos that are coming out is to give the people of Hawaii, you locals, the tips and tricks, and kind of pull back the curtain to show you a little bit about the process of buying a home and therefore securing your future, not only for you, but your family and your kids, and for all the generations to come here on the islands. I've seen the struggles, I've seen the pains that families have when it comes to buying a house. I totally get it. So let's work together. I'm gonna give you what you need. I'm gonna give you all the tools in order for you to move forward and make that decision as a family to finally take hold of your future and buy a house. Now, for all of you that made it to the end, thank you so much for watching. I hope this video was helpful. I hope you learned a little bit, but more importantly, I hope you take it into action and you start moving forward. If you have any questions about anything that I talked about today or anything about real estate in general, feel free to reach out to me. Comment on my video below. You can like it, subscribe to it, or just reach out to me through any of my social media platforms, John Quindara, and I'll be more than happy to help you. I hope you guys enjoyed it. I hope to see you next time. Mahalo. Shoots.